Hi, welcome to this video day, which is on the 18th of May. It's Saturday. We're just going to be looking at a couple of pairs today, which both include the British pound, GBP, CHF, GBP, AUD. We'll go to the charts in a moment. Now, the pound sold off hard last week across numerous currencies. Now, market sentiment very bearish towards the pound, but keep this quote in mind. The worse a situation looks, the less it takes to turn it around. And that quote comes from George Soros. I think the bearish price action in the pound will peak sometime early next week. I think for country traders, the risk to reward of pound longs is good. Okay, now in terms of the charts, we will go and take a look at them now, but please do keep in mind when I'm giving my view of the charts, it's my view as of this moment in time. It can of course change in line with the market conditions. If you want all our trading techniques and our daily technical sentiment analysis of 14 major forex pairs, you can get live access to our member center on the link beneath this video, and you can also join our free mailing list if you wish. Right, let's look at the first pair, which is going to be GBP CHF.
Right, GBP CHF chart and double draw levels in a moment, but in terms of fundamentals and sentiment, obviously that's what's driving the pound. And let's have a look at the market kind of view of sterling, which is neatly summed up in terms of point number one, which is a quote. It says, "Sterling testing new 3-month lows. Prime Minister May will be gone by the summer. Market since no deal Brexit risks have risen sharply. The British pound is seen plunging to fresh multi-month lows with no apparent let-up in selling interest on the horizon." That's from Pound Sterling Live. When I see this in the media, no apparent let-up in selling interest on the horizon in terms of any currency, I'm looking normally to go the other way, because it just means the bad news is getting priced in. And not only is the bad news getting priced in, the market is seeing things that could happen which probably are not going to happen. The no deal Brexit risks have risen sharply. I don't think they have, actually. Why? May's successor, okay, could be a hardliner like Boris Johnson, but keep in mind the majority of the UK Parliament still opposes hard Brexit. So a deal will probably be done. Now, in terms of the obstacle to the deal, it's been the Irish border, hasn't it? Yeah, the backstop. Seen endless debate about it. The solution to it is easy. I don't understand why Theresa May has messed this up so much, actually. The way to solve the problem is to have an invisible border like Sweden and Norway do. You don't have to have border checks, which everyone wants to avoid. It's the easy solution. I think that will become the solution. Okay, that's just my view. But in terms of, basically Brexit risks have risen sharply. I just don't think they have. Anyway, bad news is getting priced in. Economic data from the UK, Brexit side has been good recently. Interest rates would have risen already if it wasn't for Brexit. Also, and this just isn't in terms of GBP, CHF, the big pound moved down. If you look at Forex volumes, it's on low volumes. It's not on high volumes. Low volume falls or rises in short periods of time don't tend to last. Okay. Now, in terms of the chart itself, fallen hard, Bollinger Bands, which indicate volatility, have widened out, and we've come outside of the outer Bollinger Band. Now, when you get outside of the outer Bollinger Bands, when you have a big fall like this, you're normally going to come back in, okay? Same applies to rises, because it's just indicating that fear is gripping the market, getting a little bit too bearish, and a recoil is likely. Now, how are we going to play this one? Well, basically here, you see those lows taken out. That level equates to 129.12, okay? And I simply want to buy back through that level, not at 129.12. I want to get clear of the round number. I want to get through 129.30. Always a lot of turbulence around round numbers, I've said in lots of videos. Now, in terms of if we rally through the level, we will buy. Where will we place our stop? Well, we're going to use another round number, which is 128, which is a weekly level as well. Round numbers always so important in terms of Forex pairs. So I'd put my stop probably at 127.60, well clear of the round number. So if we go through this round number, stop behind this round number. What happens if we go through 128? And my view is wrong in the short term that we're going to rally. Basically, if we go through 128, I'll buy straight back through 128.30, okay? And then put my stop at 126.70. And we do this all the time, just playing two round numbers. And it's an easy way to trade and a good way to trade, okay? Because if you catch the strength, okay, she's normally not going to penetrate the next round number down. Now, where could we go to on the upside? Very often when you get a sell-off like this, which is just really, just pure sentiment really, you're going to retrace the whole move. Go for 134. So from our perspective, just basically pound is going to have a rebound. Obviously, if she does rebound, you'll manage the trade on the way up. But I think it looks a decent risk to reward trade. You've got near enough 4 to 1. And I think, yeah, the pound selling is just basically overdone. And this pair is a good example. Right, let's now shift to our next pair, which is going to be GBP AUD. Right, we're on the GBP AUD. I'm looking at the monthly chart first of all. And the reason for this is because in terms of GBP CHF, I see that as kind of a swing trade back to the highs. This pair here, I see going a lot higher. Okay, my view, GBP against all the commodity currencies is we're going to retrace the whole of the Brexit sell-off, and you can see there's the Brexit sell-off, the big candle, and we've been working our way higher. We're following this in the guest pairs of the member centre, and we did get stopped out of our long trade, but we still took 300 pips in profit. And I want to get back in. I think that there's not much downside. Sure, we're off the high of the month, but basically we're still blue. You got a double top effectively there. This is really to define the target. The entry level on the daily chart and the stop are clear. Once we look at the daily chart, the target you can't see. Target is obviously going to be here for us. So the 2 level, so you're looking at 1,500 pips. And yeah, I'm very bullish of the pound on the commodity currencies. They've all got such weak fundamentals, okay? We'll discuss the fundamentals a little bit, well, obviously, when we're on the daily chart, which we're going to shift to now. So let's take a look at it. On the GBP AUD daily chart, draw my levels in a moment. But in terms of fundamentals and sentiment, we know that UK economy is in decent health. Yeah, the sell-off on GBP is all to do with Brexit fears, which we think are overdone. Now, UK economy doing relatively well. Same cannot be said for Australia at the moment. Interest rate cuts are coming in Australia, which is bearish for the Aussie. The economy is slowing up. You've got high debt levels, and it's exposed to China as its major trading partner, and China's got terrible problems. So the economic outlook going forward is just not good for Australia. Also, it's a proxy risk currency, and what I mean by that is that, if you've got a healthy global economy, the commodity currencies like the Aussie will do generally well. When you haven't got a healthy global economy, they won't. And the global economy is not healthy. Growth is slowing up. We've still got risk on in the markets, but I think we're going to move to risk off. If we move to risk off, the Aussie will get hit hard, and that'll be an additional bonus for the British pound. But in terms of the actual technical setup, using the Bollinger Bands again here, if I'm bullish, I always like to see the 20-day moving average give way. Then I'm expecting it to act as support, and we act as support there, push off, we get a little bit overbought, we tightened our stop up on our long, got stopped out, but we made, I think, just over 300 pips profit in that. We've drifted since a bit lower. We're sitting right on the 20-day moving average, and it's also a round number, so it will naturally act as support in our view. There's the round number just there. I can draw trajectory in as well. So double trend line support. And just, yeah, if you're coming in fresh to this trade, just through the next round number. Okay, so you got 186 as the next round number, coming through 186, 30 or 40. Just get clear of the round number and then see if she runs to the upside. And yeah, in terms of why I showed the monthly chart is I think we are going to get back to there, obviously, but I just think we're going far higher and up to the 2 level. So even if it goes up to here, that's near enough 3 to 1. In terms of your stop, you'd want it at about 184.60 in my view on a breakout. If she does get through this level, it's got to finish your run up and break this candle high here and carry on up to the upside. What if she breaks down? Just do the same as what I was saying with GBP CHF. Key off coming through one round number, clear of it, stop back well behind the other round number. I think this looks a decent trade setup, and I like them both. This one is more of a longer term one for me. The other one is a swing trade, as I said earlier. But you can track this pair with us in the guest pair section of the members site if you wish, of course. And if you ever have any queries on any of the videos that I do, please feel free to email me. But that now is the video for today. We'll see how these trade setups go. Thank you very much for watching me as usual. Take care. Have a good day.